And there's more light at the end of the tunnel because we are starting to talk about the next halving. Now, the next halving for Bitcoin isn't going to be happening until, of course, 2024, more than likely around December. The halving for the uninitiated is the reduction of the block reward paid out to miners for solving a block. A block is a list of transactions that have been submitted to a Bitcoin node for processing. That's the best, easiest way to explain it right now without getting into much more technical detail. Now, a miner being paid off of this, having their reward cut in half, obviously, basically increases their cost to produce a single Bitcoin. So because of the increase of cost to produce a single Bitcoin, the price of Bitcoin usually goes up a certain amount in relation to that. So this is what we call the halving cycle. And this halving cycle, of course, is extremely important to the pricing of Bitcoin because every 4 years when Bitcoin halves, we see the price go up. And once the price goes up, usually retail takes notice, actually not even paying attention to the halving cycle, and starts FOMOing in, which actually pushes the price of Bitcoin way above where it should actually be, which would be the actual cost of minting the Bitcoin. Interestingly enough, this seems to continue to happen over and over again since the inception of Bitcoin. Now, CoinDesk has said Bitcoin could rally to 63K ahead of the next mining reward halving. Now, if we were to purely, and this isn't financial advice, but if we were to purely base off the halving cycle, where Bitcoin would be after the next halving, it would be at $210,000. And then for the next cycle, bear cycle, which would be around 2026, we would see it come back down to 60,000. This is kind of where we've seen Bitcoin move. We always see the halving happen, Bitcoin go up basically to about 300% of the previous all-time high, something along those lines. Then it comes back down to the previous all-time high for the bear market. Then it goes back up. Not financial advice once again, just kind of a general overview. Bitcoin tends to bottom out and start rallying 15 months ahead of the halving, past data shows. And this is where things get a little interesting because we start to see here essentially a pattern for us to not necessarily be making bull run money for cryptocurrency mining, but we start to see revenues slowly return. The question is this time, because as I talked to Halving at the mining conference and a few other Bitcoin miners as well, is that we ended up in a position where miners are not selling, right? There's not a huge capitulation. We're kind of sitting, especially on the GPU side, in a position where miners actually, a lot of miners had their equipment paid off and just turned the rigs off. And they're waiting for the next cycle because miners are aware of the cycle. Luckily, on the Bitcoin side of things, we are starting to see that some people, big miners, expanded too far. Most recently, like we saw with Cores yesterday, getting ready to file for bankruptcy. And that's going to alleviate some of it because what ends up happening in this cycle for cryptocurrency mining in general is that you have to have some people fail. Right? This is the way the story goes. It's been going like this since the inception of Bitcoin. And unfortunately, it's the way it will always end up going, is that you have to have the people that get greedy in the bull run and borrow way too much money and crash out and have to sell everything off at a loss. This is the way it gets handled, unfortunately. You don't want to, see people fail. It's a very tough thing, but this is why when we talk about purchasing mining equipment and so on, you don't want to spend more than you can lose. You don't want to buy anything on credit. I've never bought any mining equipment on credit. My biggest mistake that I ever made was actually renting a facility because that is basically a credit line at the end of the day. That's a liability that I shouldn't have done. That's my biggest mistake. And I let you guys know about that. But when we get into it, that's why in mining, I approach it from this perspective. You buy with cash where you can, and then you hodl that silicon until it comes to the point to where other people are shaken out of the market. The thing is right now we're in a weird position where the market has not shaken out a lot of the miners, especially on the GPU side. And this data is the data that I'm getting from HiveOS, meaning that HiveOS is basically telling me, or what I understand, is that these rigs have just been turned off. They have not been sold. We're not seeing a ton on the market. The only thing we've really seen on the market is like previous gen stuff, like the 5000 series. Yes, we could say the 3070 is down to like 450, something along those lines, but it should be technically much lower at this point, and we should see a lot more hitting the market. Now, that could still be coming. I think, like we've talked about before, November and December are going to be the times to be looking for this as people sell off, especially home miners, sell off some of their equipment for holiday costs. Yes, it's not very fun to capitalize on somebody selling stuff for holiday costs, but that is the nature of the beast, right? So these are things that you could be looking out for right now if you do have some capital set aside to invest. Obviously not financial advice. These are just the opportunities that bounce around in my head when I'm thinking about it. Now, it says, quote, be fearful when others are greedy and greedy when others are fearful, end quote. That's legendary investor Warren Buffett. Perhaps now is the time to be greedy in the crypto market, as the battered Bitcoin could soon find relief and rally to $63,000 by March of 2024, when the cryptocurrency is likely to undergo a mining reward halving, because it is getting accelerated as more hash rate goes onto the network. But it'll slow down again, by the way, when we get to, of course, the summer for the Western side of things, right? When the cryptocurrency is likely to undergo that halving, a programmed code aimed at reducing the pay is a program. Here we go. We got this. Is a programmed code aimed at reducing the pace of supply expansion by 50% every 4 years. We already talked about that. That's the latest forecast from Marcus Thielen, head of research and strategy at crypto services provider Matrixport, which has $10 billion in assets under management. The positive prediction is based on the assumption that Bitcoin will repeat the bullish price action seen in the lead up to the July 2016 and the April 2020 halvings. On both occasions, Bitcoin rallied into bullish wins 15 months ahead of the halving, and in the halving month traded to 39% higher from where it changed hands 2 years ago. So if history is a guide, Bitcoin could see a change of fortune starting next month and rise to 63,000 by March of 2024 to trade 39% higher than the March 22 price of 45,538. Prices started to rally 15 months before the next halving, November of 2022, and they tend to finish 39% from where they traded 24 months prior. This would imply that Bitcoin trades around $63,000 by March of 2024, Thielen wrote in the latest edition of the Matrix on Target Note. Past performance is no guarantee of future results. That said, history often rhymes and the macro outlook could improve in the coming months. Federal Reserve officials recently hinted at slower pace of monetary tightening from December. Besides, there are signs of China softening its stance on crypto, according to Thielen. The timing of Hong Kong potentially legalizing retail crypto trading in order to become a crypto hub right after China's Party Congress, which is held only twice every decade, signals that China is changing its stance towards crypto, Thielen noted. Russia has also changed its stance in the light of the economic sanctions. President Vladimir Putin and China are seeking an alternate to the USD system, together with Saudi Arabia, which desires to join the BRICS nations and is keenly interested in upgrading their economy into Web3. A new multi-year crypto bull market might be starting, Thielen added. I would also like to add to that you need to pay attention to the proxy hash wars that we talked about yesterday with Russia and Kazakhstan, where Russia is essentially bolstering the power grid and investing in the power grid of Kazakhstan in return for Bitcoin mining hash power. This is going to be extremely relevant, especially as we start to see not only what we have, which is essentially a decentralization of reserve currencies. So this is kind of something, this is an idea that like a lot of people have talked about in the past, where you see not full decentralization, because that's never where we'll end up getting, but a kind of a wrench in the gears of centralization that breaks things apart a little bit more. Right now, as it sits globally, the USD is the only reserve currency. A reserve currency means that people move into that currency essentially for primary trade. And this is due to the fact that Saudi Arabia accepts US dollar for oil. So the things that are changing here coming up, like we've talked about in the past, is BRICS. Now, BRICS is going to be set up as another reserve currency, and the partnership there is China and Russia, and there is talks of course, Saudi Arabia participating in that. Combine that with the possibility of 20% of the oil being purchasable with yuan, which we talked about earlier this year as well, and you have a position where you have a wrench thrown into the gears of the USD or the US dollar as a reserve currency. at the end of the day, this could end up actually playing out good in cryptocurrency's favor because you end up bolstering, of course, the possibility of crypto being a reserve currency that is for the people and not for the nation states. But initially, it's going to be a very bumpy ride. These are just things that I look at, though, as we move towards it. And I think it's, to a certain extent, inevitable. It does mean that, of course, Western nations are going to suffer economically, but probably on a global scale, that's going to happen no matter what here too for a little bit as the world recovers from all of the recent events. Bitcoin has seen 3 reward halvings to date. Prices soared from 8,800 to 69,000 in 18 months following a third halving dated May 12th of 2020. The fourth halving was initially slated to happen in May of 2024. However, with the hash rate of computing power dedicated to mining blocks surging during the bear market, the reward halving is now expected to take place in March of 2024. After the event, the per block reward paid to miners will drop from 6.25 BTC to 3.12 BTC, bringing the cryptocurrency's inflation rate down to 1.1%. Bitcoin miners solve complex algorithmic problems to mine blocks and verify transactions in return for rewards paid in BTC. The cryptocurrency's fixed monetary policy of having supply expansion every 4 years contrasts with the ever-increasing fiat money supply. That has motivated many, including business intelligence firm MicroStrategy, to adopt Bitcoin as a reserve asset. Now, in my humble opinion, a reserve asset makes a lot of sense for Bitcoin, but we still need a transactional asset. And I think that you can have multiple different cryptocurrencies that serve different purposes within the scene, in the space. So I've never been a full-on Bitcoin maximalist. Yes, I think that Lightning Network does wonders for transactions, but we are still utilizing a currency that essentially is deflationary at the end of the day. Yes, not till 2140 or whatever it may be when the final Bitcoin is mined, but at the end of the day, it ends up being capped, right? The difference to that is that if we want to basically stay on pace with something like the US dollar and have something that's transactional and inflationary, well, Dogecoin is there. And I think it's really interesting. Not to mention that from the mining perspective, if we're really looking at the most profitable endeavor right now, script mining seems to be the best, both because the miners are mining Dogecoin, which is seeing some really nice returns, but it can merge mine other coins, meaning if you buy one miner, you can mine 2 coins with that single miner. That's kind of what I'm looking at. Really wish I would have made some more shift into more Litecoin and basically script miners earlier on last year, but unfortunately I missed the boat on that, and hopefully I don't continue to miss the boat on that. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.